The Indian stock market just hit a massive speed bump today, and if you looked at the headlines, it was just a sea of red. So what exactly spooked investors? Let's get into it and break down the perfect storm that led to today's big tumble.
Just look at that number, minus 619 points. That's how far the BSE Sensex plunged in a single day. That's the kind of drop that really grabs everyone's attention. Now, a fall this big, it's never ever about just one thing. It's a signal. And today, we're going to decode exactly what it's telling us.
So yeah, the big question is, what sent the market into a total nosedive? That's what we're here to figure out. We're going to explore all the interconnected forces at play, everything from global jitters to a specific corporate crisis that literally sent ripples through the entire system.
Okay, so first things first, let's look at the hard data. The numbers behind the headlines that really paint the full picture of the damage from today's trading session.
And here they are, the two main benchmarks for the Indian market. And you can see they fell right in step with each other. The BSE Sensex closed at 85,093. That's down 619 points, while the NSE Nifty dropped 230 points to end up at 25,950. So the key takeaway here, this wasn't just some minor dip. This was a significant, broad-based decline that really affected the whole market.
All right, so with those numbers in mind, let's zoom out for a second and look at the bigger picture. See, a drop like this is rarely an isolated event. It's almost always triggered by these bigger macro factors. And today was a classic example. We had pressure coming from both outside and inside India. And believe it or not, one of the biggest reasons for all this caution is happening thousands of miles away in the US. Right now, investors all over the globe are basically holding their breath waiting for the Federal Reserve's next move. Because here's the thing, what the Fed decides on interest rates doesn't just stay in the US. Oh no, it creates ripple effects across the entire world, including right here in India.
And this is where it gets really interesting. Now, you might be thinking, wait, a rate cut is expected? Isn't that good news? And well, on the surface, yeah, it is. The market has pretty much already priced in a 25 basis point cut. But the real fear, the big uncertainty that's making everyone nervous, is about what comes next. What's the Fed going to signal for the future? That doubt is what's making investors so jumpy.
And this quote right here, it just captures the mood perfectly. Traders are reluctant to take fresh directional positions until clearer signals emerge. It makes total sense, right? When the path forward is foggy, the big investors don't make big bets. They play defense. It basically means everyone's waiting on the sidelines for a much clearer signal before they're willing to put more money to work.
Okay, so factor number 2 is much closer to home. Good old-fashioned profit-taking. You see, the market had this really strong rally just last Friday, right after the Reserve Bank of India cut its own rates. So what often happens after a sharp rise like that? You guessed it, a lot of investors decide it's the perfect time to cash in their chips, lock in those nice gains, and that, of course, adds a ton of selling pressure.
And this really highlights an ongoing trend that's been a persistent drag on the market. It's like a real tug-of-war. On one side, you've got the foreign institutional investors, the FIIs, and they've been selling off Indian stocks. But on the other side, you have our domestic institutional investors, the DIIs, who are actually buying them up. Now, while that domestic confidence is a great sign for the long term, right now that steady outflow of foreign money is creating a major headwind for the market.
So, as if all those big picture pressures weren't enough to deal with, a massive, company-specific crisis was unfolding at the exact same time. And this one sent its own shockwaves through the market. Yep, we're talking about Indigo. 10%. A 10% drop. That's how much Indigo's stock price plunged during the day. It was in an absolute free fall. And look, when a major, widely held company like Indigo takes a massive hit like this, it acts as a huge red flag. It just sours the sentiment across the entire market. And this wasn't just some freak one-day event. Oh no, this was the 7th consecutive day of losses for the airline stock. What started as a problem has now clearly escalated into a full-blown crisis, with investors just rushing for the exits. And the fallout from this, it's been absolutely immense. We're talking a massive erosion of investor wealth. Its market cap, which is the total value of all its shares, has taken a huge hit. And this all stems from some really severe operational problems. We're talking thousands of flight cancellations, and now intense scrutiny from regulators. It's really a perfect storm for one company, but the impact is big enough to be felt across the whole market. So naturally, all this negativity didn't just stay contained with Indigo.
It spilled over, and when it combined with those global jitters we talked about, it triggered a much, much wider sell-off. Let's take a look at how that damage spread right across the board. Okay, so this chart tells a really interesting story. It reveals a super important detail about today's sell-off. So yeah, the main indices were down, but the damage was actually much, much deeper elsewhere. Take the Nifty Realty Index, for example. It was the top laggard, down around 4%. And the broader markets, the mid-cap and small-cap stocks, they also got hit way harder. And what does that tell us? It tells us that when fear takes over, investors tend to flee the smaller, riskier stocks first.
And it wasn't just realty feeling the heat. The pain was felt pretty much everywhere. We saw big drops in PSU, banks, media, metal, auto, financial services. I mean, the list just goes on and on. The selling pressure was so widespread, it just confirmed this was a classic risk-off day. A day where investors aren't picking and choosing, they're just selling almost everything.
Okay, so we've looked at all the evidence, the global fears, the local profit-taking, that big corporate crisis. So what's the final diagnosis? What's the market's mood right now? The final diagnosis is pretty clear. The market's mood is overwhelmingly defensive. And what does that mean? It's a state where investors are way more focused on protecting their capital than they are on chasing new gains. They're avoiding risk, they're sitting on the sidelines waiting for the storm to pass. And yeah, all those factors we've discussed have pushed investors squarely into this very cautious corner. You can almost think of it like a recipe for a market downturn, right? The base ingredient was that global uncertainty, courtesy of the US Fed. Then you add a major shock with the indigo crisis. You stir that in with the persistent selling from foreign funds, and you top it all off with a weakening rupee. Each of those elements on its own is a concern, but when you put them all together, the combination is incredibly potent. So look, if there is one key thing to take away from all of this, it's this. Market drops like the one we saw today rarely have a single cause. There was no one smoking gun here. Instead, it was this powerful, perfect storm, a combination of global anxiety, local profit-taking, major corporate distress, and that currency weakness all hitting at the same time. And all of that leaves us with the big question moving forward. In a market that's facing so many headwinds right now, from what the Fed is going to do next to these ongoing internal challenges, what's it going to take? What will be the catalyst that finally breaks through this defensive mood and brings the bulls and that feeling of confidence back into the market? That right now is the key question on every single investor's mind.